All right, guys, good morning. It's been a while. When Bitcoin nukes, it's a good time to get together and have a little chat about what's going on and try and make a little bit of sense of it and see where we are in the nuke that we are currently experiencing. So the plan here is I'm going to fly through basically a few scenarios with Bitcoin. I'm going to talk about why what is happening, how low can we go, and what sort of scenarios may follow that. So I will keep an eye on the chat. So if you have any comments or questions, I will try and pick them up. Let's get into it then. Oh yeah, as a reminder, not financial advice. You can see at the bottom, it's risky. This is the government sponsored advisory that you could potentially lose all your money. So definitely not providing you with financial advice. Anyway, now that's out of the way. So Bitcoin, this is the Decent Trader dashboard here. You can see obviously everything's red, which is not generally a good sign of what's going on in terms of price. So not only that, we've also got the market being pretty badly positioned. So we've got twice as many people, or more than twice as many people long than there are short. We have got a positive funding rate as prices coming down, and open interest is actually starting to come down now. However, as we'll see, it's a little bit more complicated than that. So let's start with where we are. So this chart here is the bull market comparison. What it does is it looks at it plots out the cycle starting from the halving, or what happens with price. And normally what happens after the halving is we'll have a period of sideways or down, and then price tends to go up. We'll get rid of 2013 because it was a bit funny, that one with the Willy bot and stuff. So yes, what we should expect to see from here is price to start appreciating, and the fact that the supply has been halved, or the new supply rather, which is the most important thing, which people need to remember, has been halved. That should start to kick in, and we should see price to start to appreciate. Now, that is all true in the past. However, it is slightly different this time. So why is it different? Well, fundamentally, price has gone higher. So we've obviously had the ETF, and all of the expectation with that. And what came with the ETF was a massive wall of demand on the assumption that Bitcoin price is going to, or the supply is going to halve and price is going to go up. That's always been something that's been built into the market. But obviously, we've had all of this additional hype this time around, which has led to price going higher. And while it is true that new supply is halved, what isn't true, what we need to remember is that there's a huge amount of supply which isn't on the margins. So when we're talking about supply halving, that's great for the margins. So if you assume everyone holds their coins and they're never going to sell, and then there's few of them produced, well, yes, of course, price will go up, assuming demand remains the same. But what if demand remains the same and there's a huge amount of those locked up coins that just get dumped on the market? And to some extent, this is what we are seeing. So part of it's kind of natural in the cycle, in the sense that when you pass all-time highs, like we saw in all of the previous cycles, longer term holders start unwinding the position. So we are definitely seeing that. Sorry, I should have said this chart here is the 1 year hodl wave. What that means is it's the number of coins, or the percentage of coins which has been held for greater than or equal to 1 year. And so we've seen that drop off significantly. So part of that's kind of organic within the cycle where we are in terms of price, but other element of it is to do with the ETF shift between Grayscale and the other ETFs like the IBIT one. Now, that is a real unknown quantity in my mind, because what we don't know is it like a left pocket, right pocket? We know Grayscale's got like really quite high fees in comparison to its competitors. So have people just simply move their coins from their left pocket to the right? Or is it new holders? Like, we just don't know. Ideally, it will be left pocket, right pocket, but it's an unknown. Anyway, that has also obviously impacted this chart, and it will also impact things like Bitcoin value days destroyed and all this sort of stuff, which looks at the time on which the coins have been held versus when they're sold. So we know that the cycle's is different because of that specifically. Now I've got a chart here which looks at previous cycles as well. Now the bluey green turquoise line, whatever, is where the halving takes place. Now if we take a look at a retracement as to where we would be. So in terms of time, I've kind of put it in line with the current halving and move forward. So we're sort of around here in terms of normal halving cycles. We should be around the 50% retracement level. So we're about here and we're about here in the previous cycle. Now that on current price levels would have us around at the 42,000 level. So I believe that we've moved too quick, too soon as a result of the ETF. And now we've got ourselves, and you'll see in a moment, into a highly leveraged situation where possibly the price can't possibly go down because, you know, the Bitcoin output's getting halved. Yeah, forgetting that the market's massively leveraged and that there's all of the other coins that still remain, you know. I don't know what we're at now, but, you know, it's probably 20 million coins or something, certainly close to it. So all that kind of suggests that, yes, we're ahead of schedule. And where might we actually be? Possibly more like around 44,000, or certainly, you know, in the consolidation that we had before the big leg up. If you recall, the 61.8 was pretty much tagged the top when the ETF was launched, and then we had a sell-off, and then it's just been up only until March, after which we've consolidated and gone down. Now, what does that mean? I think that means there's a slight case for a potential pullback anyway, because of this over exuberance that we've seen in the market. What we can also, another big factor as to what's been going on, obviously, is that we've had the Germans selling. We've got the Mt. Gox coins that have been moved but not yet sold. There's an idea of the schedule here as to how that might happen, but it's important to note that that hasn't actually happened yet. And we have the miners. So here's where the Mt. Gox originally moved, and here's the miners selling off. So it's difficult to imagine that the two things aren't related. I suspect that we were going to correct anyway, but the miners probably got spooked, in my opinion, by the Gox coins, and they were like, you know what, let's just sell now. And as a result, they kind of front run the Gox coins, and also the Germans to some extent, who are selling. Now, I don't know why the Germans are selling. If anybody does know, please do let me know in the comments. I'm slightly concerned about it, to be brutally honest, because why would you sell? And one of the reasons why you might sell if you're the government is because you're going to bring in some sort of legislation, and it doesn't make sense for you to hold the coins. That could be complete rubbish. It's just sort of a thought experiment, but I'm a little bit concerned about that. Anyway, the way that it's all operating at the moment, it does remind me very much of a few places on the chart, but in particular at the May 21 highs, where we found that we had a big miner capitulation with the Chinese miners shutting off the miners. We are seeing a capitulation now. It is a normal event around the halving. You can see there was a capitulation last halving and the one prior. That could be, you know, just miners being unprofitable, other miners pushing on a game theory basis, price lower to try and get rid of their competition. But yeah, it does normally happen. So that's kind of business as usual. But the problem is these Gox coins and the German coins as well, and the fact that we have had this over exuberance, which has led to open interest being so high as it currently is. It's a perfect storm for there to be a train coming at you and you're standing right in the way of it, potentially, if you leverage long, that is, at the moment, which isn't a great place to be. So let's just take a look at, so actually, before we move on, yes, just to note, the end of cycle, if you run from the start of the cycle to like the tops previously, kind of implies that March the 31st would be the high of the cycle on the earlier basis, or sometime in October at the end of next year. So that within context, it's kind of it's a bit of a nasty, well, it's certainly a nasty correction. There's possibly with a ways to go, but there's still kind of time for the cycle to work it all through. However, what is really important to note is that when you have a big down move, on most instances, not every instance, COVID's a bit of an example where it didn't reverse as quick as I'm going to say, but normally, sorry, reverse quicker, but normally when you have a big correction, it takes quite a long period of time. The bigger the correction, the longer the time to consolidate and then move high back up again. So the lower this thing goes, the longer, in my opinion, it'll take to resolve itself. So yeah. So yes, plenty of time potentially left in the cycle. And if we were to get back to where we should normally be, it's kind of indicatively saying, around that 42K level might be an area of interest. Now, looking at Bitcoin itself, I'll get onto liquidations in a moment, but open interest, which is the sum of the derivative contracts that are open in dollar values, that currently is sat at the lows here at about 14 billion, which is the similar level to what it was when we were at the lows back at about 60K in May. Now that's problematic because it means that we've still got a lot of longs in the system that are yet to be flushed out. But also note that a huge amount of this open interest came from when we were down at 42K. So at 42K, we're at 9.5 billion. And now we're about 13.8. I can't get the thing to go on the bottom there. But anyway, so it's about 4 billions worth of leverage is in the system from about 42,000 or so, and up. So there is still a lot of people in profit, but they are coming under increasing pressure as prices is coming down here. So what does that mean? It means that the gun is still very much loaded. So we have this supply coming at us at the moment on the spot markets, and as we've come down, we have seen a decrease in open interest, but generally people have still held from higher than we currently are, and also those guys who are still long from 42K and up. So the market's has a loaded gun situation where price is coming down, and we also have 2 times as many people long as there are short, which isn't ideal. So a lot of the general, so what that means in layman's terms is, so we always have as many people long as we are short in derivatives terms. However, it's the actual number of accounts. So the number of accounts that is long is 2 times that as to those who are short, and the herd is generally wrong. So until that changes, things are going to get problematic. You can see actually as price came down from 63K, everybody was long in it. Yeah, everyone was buying the dip. Oh, we'll get the range lows, or we'll buy the wick, we'll buy whatever. It just kept going up. Yes, and then we got to about 58K, and that has generally started to subside. So the market is kind of unwinding a little bit now. So this is a good thing. So price is coming down, and fewer people are wanting to be long, which means that those positions are starting to get closed out. So with that, we have funding. So other problems that we've seen on the way down, we've seen a divergence with price coming down and funding going up. It's always a recipe for disaster when that happens. And similarly, open interest, as I say, has come down, which is good. And the long short ratio is coming down, still way too high. So the gun's still loaded. It's kind of, we fired a couple of shots off, but it's still pretty bad. Now, beneath where current price is, we have a lot of liquidations. Normally, we gravitate, I'm going to get rid of the short side, but normally we gravitate towards liquidity. And the real damage or the real action kind of happens around the 3x liquidity. which you can see where we are sat very much on top of at the moment. And there's a big chunk of that down into the 40s. So that liquidity would effectively take us back down to where price would normally be in a normal cycle, without all of that exuberance. So that's, to me, quite interesting. We also have 5x longs there and 10x longs. So we've got loads of liquidations, which we know is the case because we've got all this open interest, which we've stacked up and it hasn't, flushed out. Plus, also we know that we've still got not everyone, but double the amount of people long as those who are short. So the market's still not in a great position. It is kind of healing a little bit, but funding still too high. I was looking at futures yesterday. I don't know if it's changed, but we're certainly not in backwardation yet, where futures prices are lower than that of spot. So it's not. To me, I don't think this is necessarily done yet. This is the chart on a more of a standard look. We've had red candles for ages. All of the indicators have been bearish for some time. We've had the terminator indicator, which is momentum and volume, effectively it's been below zero for ages. There's been no divergence whatsoever in momentum of price either, the PMO calculator. And we're coming now down to, so these levels here are what we call sniper levels, which effectively are like volume-based levels. So we are coming down to one of those at the moment, around 50K, which is in the consolidation that we had on the way up. This, I believe, to be the first possible chance for a bounce. So I'm sort of building the position here. As you can tell, there's kind of two scenarios I think is going to happen. So I can put on the liquidations here as well in trading view. You can see the liquidity there would take it all the way down to about 45K. So back towards this consolidation here. And if you recall, this is also where all that open interest really kicked on. So there's kind of an argument that we come here. If you haven't seen this before, I'll give you an example of how this can play out. We'll take it back to where a similar scenario, I believe, to where we are now, which is that May situation. If we hit the play button, you'll see that as we came down, it just gobbled through that liquidity. Interestingly, it came back to these lows over here. Now, I think these are quite important. I remember at the time, some of the guys in Decent Trader were here at the time. I bought these almost exactly at the low here. And part of the reason why is because back in the previous cycle, I remembered at 3K that there was a time when the price just absolutely ran away and there was no way to get back in. 3K was that low in the 2017 cycle. So that's before even, whatever it was, 2019, it then hit the low. I recall that was, the point to get back in. And this was a similar situation where we got the Elon Musk candle and everything went away. So that was kind of my target. And I've always tried to remember those kind of scenarios where memorable candles that takes price away and it struggles to come back to. They can always be strongly indicative of a place of demand. And yeah, as I say, we just smashed through that liquidity and then it stopped at that point. Now, another thing that I think is quite interesting is that I was going to use the word fractal. I don't really think it's appropriate. I think a repeating pattern is actually a better terminology. If we overlay the previous cycle, don't judge me for this. It's just, I use this to give me an idea of like what could be possible. If we have a look here, so I think that this cycle has been very similar to this sort of thing. If we assume that this is the top here, we kind of get something like this, which again is kind of saying sort of 46. It's getting us back to the range that we're kind of looking at where all the liquidity is. So the liquidity is effectively between 51 and 45. So there's a reasonable argument there, I think, that to say that there is still a magnet for lower. If we just do a fib retracement off that, you can see it was the 61.8 of the entire run up. And if we do the same again here, 61.8 takes us to that 44K level. So again, we're building a case here for why could we go slightly lower. And I think that it's pretty strong on the basis of all of these things. Also, if we take a look at a measured move off the top, 1.618 takes you to 46K, 2 takes you to 40K, back into this consolidation zone. It's kind of similar to what happened over here. So, I mean, just first and foremost, I don't know where this is going to go. I have to come up with scenarios. And some of the times we've got similar situations to work with, particularly where there's been a random amount of supply that has come to the market. So I think that, you know, it's likely, or it's certainly not impossible, that we find ourselves testing in here. Now, is that definitely what's going to happen? Obviously not. I do think there's another scenario to consider, which is gold. Now, gold is the original ETF, hard money, store of value place that we want to put our money, or people wanted to put their money. And gold has got a very similar setup to Bitcoin, really. You know, it had its long consolidation. It's kind of Bitcoin, but in like at a snail's pace. Found a bottom and then ran back up the highs. Now, the guys that were playing on the ETFs, you know, just done something with gold over here, where they've consolidated for ages around the highs, taken out lows along the way, and then taken out highs, and really causing absolute chaos in the market. Taken advantage of liquidity to position for the market to ultimately end up going higher. So that might indicate, and you can see when I drew this, that taking out the lows might take us on a similar basis to that 50K level, which is sort of not a million miles away from where we are now. So there's an argument, and I would be way more confident with this. There's an argument that we're taking out the lows, and I'd be way more confident with it if there wasn't this additional supply just getting lumped onto the market. You know, there was no additional guy with some gold that he'd had in his vault for years just turning up and dumping it all for no reason. Like the German government didn't turn up and start dumping the gold. So this also, I don't know what the open interest leverage scenario looked like, but this is certainly possible, but seems a bit less likely to me. So I'm not 100% sure, obviously, but it's possible. Certainly a reversal, recapturing these lows, the 56,600, 56,500 lows. Should that happen, you know, would have a really big swing failure pattern on the weekly, and it would give us an opportunity perhaps to run up a little bit more. You can see here actually we're testing the weekly super trend over here, which is actually what we did back in that May example just before we nuked. So again, something to think about. So yes, I think it's less likely that this is what's going to happen, that we put in a low here. I think that there's more evidence that there needs to be more of a flush out. So how's it been happening? It's always good to have a good check of what's actually what's driving the price lower. We can have a look at that with these VWAP bands. So since, well, basically the 1st of July, certainly the start of this week, there's been like an auto VWAP, TWAP seller in the market, which has just been effectively dominating price. So these bands show the deviation, obviously, from the blue and the orange line, which are the V and TWAP. You can see that it's deviated. So there's not, I don't know if there's an algo running per se, or if there's just someone who is manually doing this, but you know, an algorithm, it's the same thing really. you can see when we have these deviations that we effectively come back. So my strategy has been to effectively, where possible, or normally when I'm awake, to try and short VWAP and then take profit on a deviation. I don't really like longing it when things are coming down. You know, I do, as the analogy is, don't stand in front of a steaming train coming at you. But yeah, I don't particularly like long on it. Would rather be on the short side. Another thing that's been interesting is that, you know, the 30-minute super trend has been absolutely golden. Sorry, I should show that slightly differently. 30-minute super trend has been golden. Couple that with Predator, and you can see there's some pretty tasty trades to be had, you know, on the way down, if you can sort of find your strategy, which is around sort of the VWAP deviations and also trend-based analysis. So here you can see now we are getting, we did deviate quite a lot. We're getting some momentum both in volume and in price momentum, and we're starting to reach out towards the VWAP again. So in my mind, you know, this thing is continuing the sell-off until this 30-minute breaks, which is quite nice actually right at this moment, because we have both the VWAP, TWAP together also at that super trend break. So a break above there, you know, perhaps a good bounce. One thing that we haven't actually talked about, which is really important, obviously, is the book and the now, what we have here is, for those of you that don't look, this shows the passive bids and asks on the book, meaning people who've placed orders that have not yet been filled. You know, good old saying is, you know, the orders aren't real until they're filled. You know, these orders can be pulled right in front of the market at any time. Now, here we have the bid ask ratio. Now, one of the things that I really wanted to look at, I had a list of things. I will look at all of them with you in a moment. I had a list of things that I wanted to be happening before I'm comfortable that the bottom's in. One of them was actually the bid ask ratio. So what this is, it looks at the number of bids and divides it by the number of asks. And obviously, when there's more bids than asks, you have a positive ratio. And I like to look across the 25% range, because when that spiked above 2, the bottom has been in. Now, this was going to be something that I was going to use to really get quite long at the bottom. However, what we have here is the sum of the bids and asks. So rather than one over the other, this is the, you know, the first part of the equation. Now, the number of bids here is effectively trended down all of the way. No, this is on the full range. That's what we want. Now, the number of bids is, you know, pretty low. You can see the asks has dropped off. Now, the reason the asks has dropped off is because everyone's selling. So the order book is really super thin at the moment to the upside. So we now know we're in a bouncy kind of territory where, you know, if there's no sells on the book, it can create a vacuum and just suck the market back up to where it was before. You can see when we get these big reductions in the ask side of the book, we get a big pump to the upside. All of the examples where we've had such a big reduction as we've currently had of late have resulted in the bottom being in. So I am very aware of that. But now, if you look at this example back over here, the asks were, sorry, the bid, the green line or blue line, whatever, it was really quite high. It was up at 3,237. I'm just looking at Coinbase here. I do actually think Coinbase is the one to keep your eye on. But we're up at over 3K coins right now, 1,500. You know, we were at 3,000 coins at, what was that? Oh, you know, 40K. Lots of demand, lots of passive demand. People willing to show the hand on the book. Whereas there's none of that at the minute. You know, the bid's only 1,500 coins, but yet the price is, you know, 54K versus 40. So like, I don't feel comfortable that the ratio's given me enough at the minute. There's certainly given us signs that, you know, the bottom could come soon. You know, these bids could change like at any moment. A huge bidder could arrive. And actually that is sometimes what happens. You know, they do just turn up, and then you've probably got about a day or two to notice, and then off she goes to the upside. So yeah, not ideal. not ideal again, you can see quite clearly when green, it's generally good. Price is generally going to go up. And at the minute, that's just not the case. So there's no example here of a huge amount of bid coming to the table, and I think that's something to be mindful as well of at the moment. So put it all together. What do we? Where's my chart gone? I will point out as well, by the way, Predator 3-day, as usual, um, comes in with the clutch at the top. You just simply can't ignore that a red change on the 3-day Predator. It has just been golden for a long old period of time now, and similar sort of situation in the past. Now, what we've talked about is like the book, the positioning, the supply, um, open interest, all this sort of thing, momentum. And as a result, I've had a list here which we've shared in Decent Trader for some time, and through all of it, I don't believe we've yet seen enough liquidations, particularly given the amount of open interest. Not to make me satisfied, to be piling in with leverage longs or anything. The bid asks, yes, they are looking very promising, certainly in terms of potential bounce. The bid sum not good, could be better. The long short ratio has been in decline, so the number of accounts long versus short is going directionally the right way, but it's still very high. We haven't captured a mean reversion yet. Open interest way too high, in my opinion, for where we currently are. We've got no green candles on Predator, no divergences, have we? No divergence. 3 days not green. The hourly's not green, the 5 hours not green. So, you can play this as you want, as you please. Like you can stand in front of the train and maybe you'll get it right, or you can kind of wait for a little bit more in the market to give us a bit more indication that it's ready to turn around. And at the moment, in my opinion, like I'll see you down here, but I don't know really what's going to happen in between, particularly when we've got all of that potential risk overhead. I've been saying for a while, when we start at this decline, that we are in a loaded gun situation, and it is playing out. It feels very similar to this, as I say, other situations that I've been in before. Similar situation, I feel, to when we dumped through this candle as well over here. Similar kind of prices as well, to be brutally honest. 58K, similar sort of thing. So in a nutshell, that's it. I think there's two like, is it all over for the cycle? No, I don't think so. I think we just need to flush out this situation, and then we can proceed. Is it going to be the gold scenario where we just take out these lows and recapture? Everybody unwinds their positions because they start panicking as price starts going up. Everybody gets out of their longs and everybody's wrong and price continues. So that's another thing to look for, right? If price starts going up and everybody starts getting out, then I'll probably join the party at that point. But right now, there's no evidence that the bottom's in my opinion. There's some evidence that it could happen around these prices. Much more comfortable if it comes lower. But a thing to remember is the lower you go, the longer it takes to recover. And if we just use this as a basic example, if you get a drop off, similar to what we're saying here, it might indicate that you're looking in the third quarter. We could be messing around down here for some time. History states when you go down, takes a while to correct. It takes ages to sort it out. Look, other people have likened the current situation here. I agree, it is similar to this. It took ages to turn it around. Took ages to turn it around. So it's going to really potentially test people's resolve if we do go lower. I wouldn't want to be caught out, losing your shirt if it does come down here. I would maybe de-risk. I know not financial advice, but I wouldn't want you to blow up in this situation when it's likely that we will return to the highs once all of this supply is out of the way. It is back, like the price will have been transferred to buyers who want the price to go higher over a period of time. There'll be none of the this big rain cloud over us with the Gox coins. The Germans will have sold the coins to whoever they're selling them to. And the miners will be flushed out, and then there will be a new dawn. Sometimes it's darkest before the dawn. So yeah, that's kind of my opinion at the moment. I know some people won't like it. I generally only live stream these days when shit hits the fan, and the reason why is because I feel like I've got a bit of experience of it, and I want people to try and control it. There's no need to stand in front of the train. Just let it do its thing and wait for the time to get a little bit more clear. I'm gonna have a look at the comments, see if there's anything here. Right, so what's this? What's your opinion on this level for DCAing for spot long term? Well, your DCAing should be, your dollar cost averaging should be, if you're averaging, it should be based on a process which is defined, really. So you might buy on a certain day of the month or something like that. So, if you normally buy at a certain time, you should just continue to do your dollar cost averaging. This shouldn't be impacting your process. However, sometimes I will say when I do dollar cost averaging, what I'll say, okay, well, let's say I want to buy in across 12 months. If there's a nice juicy price in that month, I might just go in a bit earlier. So is it a good level for going in? Maybe a bit, maybe if this month you're going to buy X number of dollars, you use Y percentage of it, at this point. What is the probability that I estimate that the cycle top is in and no all-time high? I don't know if I actually want to say my honest view on that. I think that we'll probably see the highs again. There's a chance it's in. Like there is definitely a chance it's in. It does look very similar to previous cycles, but as I say, we've just been through why we are where we are, which is due to the over exuberance, which needs to be flushed out. So I think it would be too early to say the top's in. Like in terms of time, we're talking about March next year, October next year being the normal kind of cycle stuff. But in previous cycles, we haven't really, at this stage, we've never seen this huge amount of supply come onto the market. So it is definitely different this time in that sense. So yeah, I don't think it's going to be. I don't think the top's in, but I don't think it's likely to be in. But I'm not saying it's not possible. So I will answer the question. What do I estimate the cycle top's in an all-time high? I'll say 25% chance, depending how this goes. You think the Germans are selling to bring in some new rules about BTC? They don't want to seem impartial. Well, that's exactly what I said as well. Yeah, I agree that normally, look at what I do, not what I say. And sometimes what I'll do is before what I say. So yes, I do think that there is a chance it could be leading on that basis. Right. So I'm not going to look at the alts. I'm going to just leave it here because otherwise we'll just be going on for ages. What I would say is I would go and have the alts don't have. Okay, let's look at the alts. Right, may as well. The alts don't have all of this supply, so it is a bit of a different situation, really. But as we know, alts get absolutely hammered when Bitcoin gets hammered, so they are going to receive the fallout. Now, ETH is, yes, not looking great. Forget about the base comp. You can see we are starting to look like we're trying to turn around here because we've deviated so much from the VWAP. Whether or not it's a bot or not, I don't know, but it's certainly an algo of sorts. Right. So ETH is back at its low. So it hasn't actually broken its low. So it's kind of outperforming a little bit at the minute. And obviously these are the lows that we came to before the potential ETF announcement. If we do the same thing with ETH as we did with Bitcoin, there's 3 times as many people long as there are short. Now, Ethereum generally has a higher long-short ratio. I don't know why, it just does. Like, you do find this with a lot of coins. You can see when it hits its lows, it barely even gets. It doesn't even go negative, really. But generally, it's a generally a higher metric than Bitcoin. And you can see similarly, it's actually a bit of a scarier situation in some ways. Like the OI is what 9.2 billion versus 7 when it was at the lows last time. So it's yes, it's a lot higher. I mean, ETHs didn't have that exuberance. You can see like from the lows. Similarly, when Bitcoin was at 40K, it did have a bit of a pump up. It didn't go quite as crazy, but it's still very high. So there is, yes, a very much similar scenario with ETH. We've got all of the liquidity below us there. Huge amounts of distance from any meaningful shorts that are going to get liquidated. So yeah, I think similarly with ETH, if Bitcoin continues lower, I think ETH will probably be a really strong bounce if it does. But similarly, 2K sort of region, 2.5K, something like that would get us back into the meat of all of this stuff. Showing a good sign of a bounce, though. All we're looking at with this stuff really at the minute is like, how big's the risk here? And you really should have known it already, because it's obvious. Look at that open interest; it was at 10 billion up here, as price was getting absolutely hammered. So I do think ETH has exactly the same problem. I know that Sol's got the same problem as well. I mean, if we just quickly take a look at Sol, well, you can see what I thought last time I was looking at this. 100 could be the magnet for Sol. Again, kind of outperforming in terms of price. Lows aren't breaking down. However, you would say this looks like an ugly head and shoulders. I mean, 48 would be a bit of a nuke, wouldn't it? Certainly 100 would be a pivot point, I would expect. Below 100, I think, on Sol, if you believe the cycle is going to continue, possibly is a good place. So yes, the alt apocalypse, I don't think will happen unless Bitcoin dumps significantly more. But at the moment, we're still mid capitulation, and it's as simple as that, really. Let's have a look if there's any more questions. Thank you for thanking me for the stream. It's been a while, as I say. I'm a bit rusty. Justin Sun, the man who only appears when there is peak chaos. I do tip my hat to him for that. He really likes to get involved when the shit hits the fan, doesn't he? And like, he's not really going to be buying them. Can you imagine the Germans? Oh yeah, mate. Yeah, we'll just do the deal. No chance. What do I think of MICA and Binance Chain's future stablecoin policy? Don't know. Not going to try and talk about something I don't know about. When 12K? There's no chance of that, man. Honestly, I'm gonna. If that happens, then I think there's bigger problems. There's no chance. I mean, absolute worst case scenario, 30, like 30 to 25. Like, there's no way we're going lower than that, in my opinion. But as I say, no, very, 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 very unlikely. What do I think will happen with domination? Good question. Not sure what you're talking about there, but assuming it's Bitcoin domination, well, Bitcoin, every time Bitcoin dumps, domination goes up. So I think you have to assume the same. No difference there. I mean, it could be kind of flat. I think that the alts are lagging. I don't think it'll definitely go crazy high because we've just looked at the fact that the alts haven't broken below the low. So if the cycle is in, I don't want to talk about that, but yeah, okay. If the cycle's in, do I have an opinion on what the cycle bottom might be at? Uh, huh. Given that I've just given a very low percentage of that, it's difficult for me to think about it. But the way to do it is the way actually we always do these things, right? It's always 85% correction. I mean, I'll just hear me. Please don't like clip it up and start saying that I said the top's in for the cycle. But 85 would be 25k. So there you go, right at these lows, which is kind of what I was saying. Knee chance. Oh, sorry, I'm letting my accent come out there, but no chance that we go below 25k, in my opinion. Right, ETH BTC. Let's have a look. Well, that's what I had on the chart for ETH back in March. Kind of did some of it. I don't think we'll see that. I don't think ETH BTC will take out these lows. If it does, then I think 0.04 will be where we get to. However, I reckon it'll probably do what I've got on the chart here. If the cycle continues and the ETH ETF comes along, etc., this is probably good. What do I think about miners being out of profitability? They need price above 65k just to break even. I don't know where the 65k is coming from. Although it does kind of make sense, because I always think that the halving crash always takes you sort of close to, not the halving crash, the bear market capitulation takes you to close to the cost of production. So let's say 15, you double it, you're at 30. You half the output, you're at 60. So yeah, it kind of makes sense. 60k. If they're unprofitable, that's good, because it means the capitulation will happen. Miners will be forced to turn off the machines. We'll get those guys out of the equation. And then game theory states that the miners will probably collude and then hold on to the coins, and price will go up. So the more out of profitability they are, the kind of better short term. There is another chart we can actually look at on this stuff, which is the Puel multiple. Where is it? Here. So what this does is it looks at how profitable the miners are over the last 365 days. And the miners at the moment is a kind of, the profitability is actually similar to what the kind of levels we've seen in previous cycles. So the miners are still doing relatively well. You can see that there's the halving. So the miners all of a sudden they're making half as much effectively as they were before. And it's at the levels of capitulation that we've seen in previous cycles. So I wasn't going to show this, but it kind of is similar to what we've seen previously. So yeah, the miners being out of profitability, quite a good thing, really. We'll get rid of the miners and then we'll collude and get price back up again. Back at vwap. We're back at vwap. Okay, well, I'll be short at the minute. I can tell you that. Do I think cutting interest rates in the US economy will happen in the next months? Yeah. Well, it's coming. I mean, for ages, that's what we were all crying out for, wasn't it? So I think it's inevitably is coming. I think it was like 75% chance it was going to get cut. So do I think that means the top's in? Not necessarily. I know that there is statistics showing that when US cut rates, actually it's the start of a bigger problem. I don't necessarily think it's indicative of the top, in my opinion. I don't put the two things necessarily together. You might want to go and have a look at what gold did when those other things happened, because Bitcoin might behave a little bit more like that. Can you check out the BCH chart? Yeah, now BCH is the only other coin that I'm aware of, anyway, with GOX. a similar kind of issue because all of that supply is coming on board as well. Now, I expect that BCH will be absolutely nuked by all of the holders. Why wouldn't you nuke it? You know, the price of BCH has been absolutely woeful, particularly versus Bitcoin. CH, BC. So if we take a little trip back through time, should we go to Poloniex for the old times? So BCH is obviously versus Bitcoin has been doing absolutely woeful. I did get a 0.3. I did actually get a bit worried when all of this actually happened over here. I was like, bloody hell, have I actually got the wrong coins? But fortunately, I never got involved in it. And I think I dumped my BCH at 0.1 BTC, which as it went to 0.3, I was really shitting myself. But 0.1 ended up being a superb exit. Now, BCH, yeah, it's on its last legs. There's not really any kind of narrative for it. You know, had Craig Wright somehow fooled the courts, perhaps it could have done better. But yeah, I think this is probably the end for BCH, and we'll probably end up down at these lows. Maybe it's $100 or something. So the difference with the Gox coins is that people who are OGs who own those coins, they may well hang on to them, and you know they're still in it for the same reasons they were originally. Whereas with BCH, I don't think there's any use case or anything. I think it's just a nuke. Capriolia's electricity cost at 47k. Yeah, I think generally it doesn't go below that, so that is another reason for why we bounce sort of in and around the 50. I mean, to be honest, I did have bids at around 50. I was like 50, 51, 52, all of that. But because the train's coming in hot, I'm going to kind of wait a little bit. I think you can probably guess where I'm bidding at the minute. Do I share Cohen's view of one final alt capitulation? Well, yes, there is that possibility, particularly if Bitcoin nukes. Definitely, you know, it's possible. Just depends. Oh, I'm sort of. Did you not already say that a few times? Yes, that's correct. Do I think there's going to be an alt season? Now, for a long time prior to the sort of kickoff of this cycle, I was in the camp that alts were screwed a bit. It is partly due to being in the UK and kind of seeing the impact of some of the regulation over here. And then having seen the meme coin cycle, it kind of changed my mind a little bit. But realistically, Bitcoin, ETH, and Sol, I do think are going to be the main benefactors of any further upside, in my opinion. You know, back in the day, there was a lot more narrative around using these other blockchains for all of these like use cases, which were all just sort of hot air, really, in my opinion. I've always, like, fortunately, in many cases, not got sucked in too much into alts for anything other than a trade. And I do think, personally, I do think that is, well, certainly for the person with my risk tolerance, is the correct approach. But yeah, Bitcoin, it's obvious, you know, Bitcoin is here to stay at the moment anyway. I do believe it has a real use case, you know, it really is a hard programmable money. ETH and Sol, they seem to be pretty good for layer 2 stuff. And a lot of time and effort's already been invested in dev on ETH, so I think it is likely to continue to do okay. I don't think it'll ever get back to its highs versus Bitcoin. And Sol, I think Sol's like got a chance of continuing to do what ETH did previous cycle. It's kind of ETH was to Bitcoin as what Sol is to ETH, but Bitcoin is like the daddy. Why is everyone looking forward to these cuts? Well, rate cuts me. So it's like if you just drill everything down to like if you have a mortgage, if your interest rates go down, people have just got more money to spend, and that runs through everything. Businesses can lend more money to do more investments. Funds can raise funds to invest more. People who've got money in the bank at the moment, they can go and have a relatively risk-free dinner on interest, and they can just sit there while got £1 million in the bank, 50k interest, absolutely no problem every year. When the interest rates are 1%, well, you need to work a bit harder to find some return. So you come to the market. So people look forward to the markets because it's more opportunity to pump more money into the system through lending, and also the opportunity cost of not having the ability to get a yield on your capital. Sorry, what's this one? What about the correlation on BTC, SPX? Both have gone and continue. Yeah, I was going to try and stay away from legacy markets. I mean, obviously they are at all-time highs and continuing to do very well. I think fundamentally, let's say BlackRock have been pumping in loads of money to Bitcoin. These guys aren't going to start piling in at 70k when they know that there's an absolute ton of supply knocking about, are they? It's kind of like, you turn up to buy something and you can see out the back there's a big dump trucks full of gold. Like, you're not going to buy it when you're the only person in the queue. So you're going to wait until everyone else has bought it and there's very little supply left. So I think that Bitcoin, it's got to work through its supply thing. I think just at the minute, the BTC, SPX, looking at the NASDAQ, all that stuff is just a red herring. I would just ignore it. What do I think about? I can't comment on that. Don't know enough information. So yes, the inverse of Mt. Cox. This is something that I've talked about as well, probably just privately, to be honest. But FTX customers are going to get repaid, aren't they? And it's likely that that's going to come in dollars. So yes, correct. Go to observation, and that, a lot of those guys are going to pile in. Now, imagine if the price, let's just say the price was 30k. Everyone's going to pile in and rebuy the coin. So I agree. It is kind of the reverse effect. And there will probably be narrative leading into that. So yes, definitely want to consider and keep on the radar. I do think all of that liquidity, or a large amount of that liquidity, will flow back in from disgruntled people who didn't get to keep their coins at the time. Crypto Twitter is constantly saying that ETF will pump to 12k. No, I don't agree with that. No, I just don't think, it's very easy to think, if you're a business, why you want to own Bitcoin. You've got Saylor peddling it to everyone about it being hard money. It's somewhere to be somewhat inflation resistant. You have to be quite tolerant of volatility, but I don't think it'll get to 12k. No, I've said sort of 7.5 is like, I can say 7.5, but 12, it's just a little bit too much in my opinion. What low level is likely to happen? Yeah, it's possibly at 36, but I'd like to know the level. I think. Well, the thing is, what happens here is, I need to build a model based on the information that I currently have, but that information is subject to change at any moment in time. Now, this is the way that people who actually trade operate. Other people institutions might decide differently, though, because they are effectively pulling the strings. So they will look for levels, whereas the way that I trade is based on the information in front of me. And as that changes, so as it currently stands, I'm not willing to put a pin on where I think it's going, because I could get off this live stream, go and have a look at my go and look at the situation, and it is currently changed. So I would sort of say, you need, if in doubt, just let it work it out. Yeah. Thanks. If you do, remember to like the video and all that stuff. I'm not a YouTuber at the end of the day, but do like the video, click the bell notifications and all that, because if you do show that you're interested, I may do more in future. And there's the question: will I return to YouTube? I may do. Yeah. I may do something a little bit more frequently. Maybe once a month or something. I've got a lot of other things on, but I do like to go when it's in time of crisis. Right. Okay, guys. I think that was a little bit more than I was going to do. I hope it was interesting for some of you. Don't over leverage too soon at the bottom. Work your way into the position. I'm not providing financial advice, just some friendly suggestions. Could we go lower? Yes. Don't stand in front of a train, particularly with leverage, is my advice to you. I've seen some of the best people that I've known at trading this game get wiped out by doing that. Always when you're in a situation like this, it's better to be safe than sorry. So with that, I'll leave you and have a great weekend. Ciao.